Good afternoon, everybody. It's about 2 o'clock Pacific time. Today is the 21st of November. It's about 2 o'clock. All three markets down slightly today on average volume. The volume is not great on all three of the markets. Starting with the NASDAQ composite down about 80 points, 84 points, about 0.6%. Still within the channel. If you look at the daily chart, you'll find that after actually, let's go to the weekly chart. Very nice cup and handle pattern, moved up over the key resistance point. So it's still within the zone. It's got to clear this resistance zone of 14,419, which I think will take a little bit of time. And again, this week, I'm not expecting too much volume. So this was, after a very strong day yesterday, this is a small give back, not a big problem. I still think it's doing well within the channel. On the S&P 500 side, down about 9 points, 0.2%, still very much within the channel, on the uptrend, on the channel, fighting its resistance here at the 45-40 zone and has hit back from here. So still waiting for it to clear this completely before I declare that this is going to be up and to the right consistently, but you should expect a little bit of a chip and chop. Finally, the Dow Jones Industrial Average down about 62 points, 0.1%, almost 0.2%. Again, after a good strong set of candles, a little bit of a break. Since it is the holiday week, expect low volume. One of the stocks that showed up on the radar is doing very well is Tradeweb Markets. They provide and manage online exchanges for brokerages and things of that nature. The company has been around for quite a bit of time. So let's do our 5-step analysis, find out why and what is the reason it's showing up on the radar. We start always with the financials, about 22 billion in market cap. So roughly about $20+ billion enterprise value. We start with the annual revenue statement first. Well, look at the income statement from about almost a little less than 500 million to about 1.1 billion. So almost 2 times in the last 7 years. Not terrific growth, but it's okay. Grew about 20 to 30%, then reduced to single digits, teens growth, and then seems to have done even a little bit less than that the last couple of years. 80% gross margins, 85% gross margins, and net margins roughly in the 30% range. So that's pretty good overall. Can't complain too much. Let's look at it from a quarterly perspective. After a bunch of single-digit growth, it's going back to the double-digit growth last quarter. So $328 million in revenue, and then roughly about, as I said, $100 million in profit on a 300. So 30% net income, 80% to 85% gross margins, very strong business in that side. If you look at the revenue, it's growing about 50%, but you look at the net margins, profit is growing at 42%. So that's one of the reasons why the valuation is so rich. For a company doing only, 1.2 billion, 22 billion, 15 times is a very rich valuation. Going on to the balance sheet, total assets from a quarterly perspective, about 6 billion in assets, of which 1.5 billion is current. The rest of it, I think, is mostly, intangible assets, which I'm not sure if this is necessarily going to be a great thing. Total debt is very small, so literally negligible debt. This is a good, strong balance sheet as well. Looking at valuations, 50 times, because it's growing at 42% margins, net margins is probably a little bit high. Still, it's okay. But price to sales is rather high. But again, 80%, 85%, 85% gross margins, 30% net margins, very strong business, almost like a software, if not better than a software company. Don't think they have any dividends to speak of. They've had dividends somewhat, about 23 cents per share over the last couple of years. Not bad. 30 cents is what has been at overall. So now that we know there are no red flags on the balance sheet and revenue statement, the valuation is still a little bit rich, but keep in mind, companies that are doing very well tend to have rich valuations. Okay, so let's go to the monthly chart first. On the monthly chart, the stock IPO'd somewhere in the 2019 timeframe. So 2019, this is essentially just base building, even though it looks like a little bit of a high. This essentially is just base building, and then did a good leg up, built another base, another stage one. Stage one that actually moved all the way up quite a bit, and then a little bit of consolidation, stage 4 decline, stage 1, consolidation, stage 1, stage 2. So this is stage 2, consolidation, stage 3, decline, stage 4, consolidation, stage 1, and then going up into the right, stage 2. So this is a stage 2 accumulation phase. Had a little bit of a, I would say even this phase would have been a little bit more of a accumulation phase. But this, if you had to look at it, let's draw a nice little movement up. So we know that on the long-term chart, it's still growing within the channel. So it's on an uptrend. It's broken through. I don't think this is a key resistance, so I don't know why I drew that before. I would say resistance right now would definitely be in this range, somewhere in the 79 range, but a couple of more should be in the 80 range. And then, sorry, the support and a key resistance for it is coming up. So it's actually coming up close to 102, which might be an all-time high. That actually is a good sign for the company. So I like the stock quite a bit, given where it is right now. Let's see. Okay, going on to the weekly chart, it's going to come up against some resistance in 101 time frame. It's broken through. This is a key area. The 91 with a key resistance area, it broke through. So that might hopefully become a support for this area. Expect support somewhere in this. So it's had a very nice candle, probably after earnings somewhere in this time frame, moved up, did a little bit of a flag, had a correction for a little bit, and then moved back up again. So even in the weekly chart, I would expect to a certain extent, there is a good amount of support in the 92 range, but this is probably a safe bet if you're a long-term investor. But if you're a short-term investor, look for the 87, even in the 80, 90 range. So 94, 93, 94 is where it's currently at. 90 might be a good stop loss point, if you will. It could be a good resistance, given that it is moving towards that. All of the moving averages on the weekly chart look okay. On the daily chart, all the moving averages are up and to the right. This is a very strong position. So earnings was about a couple of weeks ago on September 23rd. They beat both the top line and bottom line, not by much, but a decent amount of money was the beat. That was a good sign. So now if you look at it, very nice pattern here. Within that long-term move, they formed another good channel. So it's moving up even within the medium-term channel. The daily channel also is moving up. What would I expect it to do? A little bit of consolidation here might not be a bad thing, going from 90 even down to the 92 zone, and then expect a leg up onto 102, as I said. If you had to do one last thing, if you look at the relative strength, it's a little bit high, but still has room for a little bit to go up. So 90 to 100 might not be, 94 to 100 might not be a bad move. And then if I had to go and find out which price point are there a lot of sellers, yeah, there seems to be a lot more selling, a lot more buying in the 93 zone. So this would be a good point. 93, 94.43 might be a good entry. 93.25, look at this yellow line. That is a point where a lot of people bought. So they might want to just say, hey, if it goes down below this, I'm going to just stop out over here. So 93.51 might be a good point to be able to say it's a stop loss, buy it in here, and expect to move up to 104. There's no big resistance between now and 102, so this should go up very well. Thank you very much for following my channel, and I appreciate it very much. Subscribe, share, like, and comment.